Alright, people's trade recap for the day. Let's talk about it. So just want to give an overall recap. Right, I looked basically same exact preset from yesterday, except now price is over here. And I look and I'm like, okay, what can we possibly consider us to sweep? We got this 4-hour high, which probably won't get hit, but I wanted it to. Scaling into 1 hour, we had this hourly high that we sweep as soon as it hits 9 o'clock on 9 hour. And I was like, alright, as soon as we sweep that, we're going to probably dump it down to here or this hourly for value get. I see that's exactly what price does. We didn't catch that, and here's why. So we sweep, try to use the 5-minute this time. Couldn't really get anything. So I was like, alright, cool, next. Let's go into the 1 minute here. This is where it gets a little more detailed, okay? Just bear with me here. Just check this out, okay? So we have the opening candle. I see us do the sweep. And then we pump down, right? What is the only confluence here that we can really see? Alright, well, number one, we did break 1 minute lows right here. 2 main lines, but we did break 1 minute lows. And number two, we have this for value gap here. So I wanted IFG, 1 minute low, we did sweep. Technically, we could enter, but I just didn't trust it because I felt like price was probably gonna give out something better. So like I wanted a second, a third con, fourth con, whatever. Right? Sweep is 1, 2 is the break of structure, 3 is this for an IFVG. That should be already enough, but I like to wait for one more, and I was waiting for this for value gap here to get tapped. Didn't happen. Then I did this. I waited for this guy to get tapped. It did get tapped, but I didn't really like it because, as you see, it kind of disrespected it, and then it just pumps lower and lower and lower into what hour? Not hourly, but hourly. Okay, that was a daily one. I was about to say that's a lot. But yeah, so I think next time I take the trade, I'll follow the 3 confluence rule if I really like it. It's more of like what respects and what can we get out of it, right? So we did break structure, we did sweep. I kind of don't even consider break structures anymore. I just ignore them now. So you guys know that. It's kind of obvious what's going to happen, right? But it's more or less of, alright, we respect him. Can we get something that respects here? Which we don't. And that was my reason for no entry, right? Because this guy's on order block, no. This guy, no. Nothing happens. Alright, then what happens? We pump lower. Create this for value gap. We disrespected. Didn't like that. Pump lower. We did get this for value gap. We did tap into. We did show reaction off of it. But I wanted it to tap into here. Why? Because this was our premium area. If you look, it was this guy from the point. So if anything there, nothing happens. So price draws into here, our hourly time frame, for value gap. And then I'm like, okay, so what can I catch out of here that I can find? So there's multiple hourly sweeps that occurs, right? I mean, you can just see it plays around here, kicks in at around 10:30. I'm looking, didn't take this trade, but I was like, it could have. Why? Because what happens? We do respect this fair value gap. Price pumps down, doesn't sweep any lows. Nothing. Then we pump up. We pump down. We sweep the low for value gap. This is the beautiful candle. Respect the fair value gap entry. Target this high. Stops below whatever this low, and just let the trade run. You would have passed that. I didn't take it though. Next up, then comes in around 1 o'clock. Usually I start to look at the charts that one. And what did I see happen? So I saw that we're still in this hourly area, and I saw that we were drawing into something. So I scaled out a little bit, 5 minute, went on this hourly here and said, alright, anything in premium I want us to tap into, and we'll probably react. This for value gap, or price 2, tap into the fair value gap, right? From there, I scaled in lower. There you go. I saw we tapped into the fair value gap. I understood that we were probably going to push down into some sorts of lows. And if you look back, let me just point this out one more time. From this fair value gap. Oh shoot. What did we do down here? I don't know if you guys can see this. But we swept these lows. So we swept lows. We're about to pump higher. We have this fair value gap to react to. What is our possible areas of draws on liquidity? This fair value gap down here. I mean, it only makes sense, right? Are we in premium and discount with this guy? Let's see. Right on discount, right? Here's our line. Right on discount. So we can target that. This is a high probable trade. So I scale down. I'm like, alright, we tap for value gap. What can I get as a confluence? Anything. Literally, I think I took it as a break of structure for an entry, because I couldn't find any confluences, and it might have been also with the use of the 30-second time frame. Let me just triple check. Oh yeah, it was the 30-second. Saw this, right? We pumped down, and then took this entry when I saw a candle that looked pretty like bullish for hour bias, and that this area was gonna go good. So I could have taken that entry, or I could have waited, right? Because, well, then again, we create this imbalance around here is where we want to tap in the fair value gap, and we take that trade. But yeah, so reason I saw we were in the 5 hour, didn't really have anything on the 1 minute to execute, but I did see some sideways movement, which probably meant we're gonna dump a little bit. Took that. TP1 was right here, TP2 was right there. I closed on TP1 because I saw a react, and I thought that this was it for the fair value gap, because technically this TP1 area did tap into the fair value gap here. If I show you guys, let's see. Right there's the fair value gap, that was TP1, and then these are TP2. So yeah, it was kind of like all together, right? Then I'm like, alright, cool. Made 200 and something off of this guy. It was like 14. I'm like, alright, cool. And now I know we're bullish. I want to see some big bullish play, but let's see what happens. What do? We pump up. We create this thingy right here. We react off of the 5 minute fair value gap, and we create this imbalance. I see price as what? It reacts off of this imbalance positively. Second candle, it's alright, and the third one stops me out. So reason here, what I could have done really to take like a careful measure is just to wait for a break of structure, honestly, when it taps into it. I might miss the trade, but break is a break. You know what I mean? Instead of entering like how I did here. Or just literally give the fair value gap space. Like, alright, that was a react. I want to see one more candle unless it closes above a bit, and then take a heavy TP like that. But these are the type of trades. If it scalps, we're going to have to sacrifice a bit of candle closure over it because we want by like points. So what happens is we sweep these lows, we tap into this breaker block area right here. Price CC taps into it, then it pumps up higher, creates this imbalance. This is in the discount region, I'm pretty sure, if I'm not wrong. Could be no, yeah, discount draws into the discount. We could have taken a trade off of here, and what could we possibly have targeted? This high, and possibly this high. As you see, price literally pumps if you were to take the entry. This is about 23, 24 points, and if we're doing a 1 to 2 RR, say I risk about 6 cons. No, let's say 20 times, what was it, 20 times 2 is 40, and we want to make 500 out of 40, so we would be risking 12 contracts here, right? And since our stop loss is 6, that's just 6 times 2 is 8 times 12. We're only risking 144, not even 250. And that's why I saw, like, see how it's 4.29, and then if I were to make it 2 RR, our stop would be 12. Let's calculate. I can already tell it's already gonna be it. Yeah, around 250. A little bit off, but that's because our RR is a little odd here. But yeah, to risk 250. Yeah, you do that. 10 to 20 flat numbers. And so we pumped up with 25, say. And that's our target. So loss around 300 to 250. Targets 500 to 600. Every time. That's all we're targeting. But yeah, trade would have went good for first TP. And when it would have went to break even or whatever you want to call that. Yeah, that was it for all my analyzing for the day. I did have this big idea of shorts, as you can see at the top here. This was when we approached market open. I said, alright, when we sweep this, I would go short, but why did I not? Just because I saw I wasn't really near our macro. But this would have been it. Oh well, could call a good trade again. But that just shows that at least I'm analyzing. And it's not that I don't know what I'm doing now, it's more just, do I feel comfortable with this, and if I don't, just risk less, you know what I mean? So yeah, like this trade over here is 25 points. I made 200 off of just the 16, and I believe that was me risking only 6 contracts or 7. 16 times 2 times 7, yeah. So that would have been 200, and down there would have been around 400, right? Let's see, 25 times 2 times 7, 350. Not too much, yeah, but we need to risk a lot more, so we're gonna do 25 times 2 times 12, making us 600 for 20. Literally, if we just go back to our notes, yeah, whatever. So yeah, that covers the trades. I did take also one on QQQ here. I'll show you guys that. I think I took a photo of it. Oh yeah. Here you go. So you can tell, right? What was my bias coming into this? If we go into the 4 hour here, scale in. I saw this 4 hour fair value gap. I understood that we did seek bias, and we do have this fair value gap in play right now. But what are we doing? We're tapping into this 4 hour fair value gap, right? What could be our next target? 4 hour highs. Going on further, we swept lows, multiple lows, coming into that fair value gap. Right, even here we swept lows. And then what happens? And now you can have new targets here, this target, whatever, right? And then from there, I try to scale into the 5 to see if I really could get something out of it. This is all I saw. I was like, alright, there's nothing here. Might as well scale into the 1 minute and just make up some entry, because I know it's a high confluence area to at least pump up a little bit. The idea was to pump into, I think it's a 15-minute fair value gap here. Yeah, 15-minute, and it did, and that's why I exited early. I exited as soon as I saw a negative reaction into the 15-minute fair value gap, and then I was out for the rest of the day. And this made me 100 and something. I was up 200 around here. I exited off of this guy just because I marked out the whatever, the high of the 1 minute. So yeah, lesson here is just to mark the confluence if you're going to trade to one, if it's a high or something, trade to that. But for like this example, there's the confluence here, and due to that reason, also I think I was scared because of this fair value gap, but that was going to get disrespected if it was following premium and discount. Yeah. Anyways, mark confluence and then go to 1 minute and just wait till you see something get disrespected, right? So that's like in this scenario, well, we're pushing into the fair value gap, we tapped into it, and then what do? We lay anchor down, closing that out. Yeah, no thank you. But yeah, so trading is good. We're gonna follow the 250 risk. We are at 49,803. Hopefully next trade we're up 49,300, and we just keep adding 500, 500, 500, 500, and just pass this thing eventually. It's only been the second day, and for us to be down only 200 is not that bad, but I think we could do a lot better. I don't want to full pour and risk everything. I don't want to get it done in like 1 or 2 days, so that's what I'm saying is just I'm gonna let it be. I'm gonna let it rip, do its thing. Alright, 500 a day is not that bad. I'm not complaining. 500, 500, 500 should pass in like probably a span of like a few weeks. And once again, if we do start passing trades, 500 one day, say I get one passing trade say I pass a trade this week, right? One good trade and we're in profit. We're up 500. Say next week I find 2 winning trades, that's 1,000, and all my losses allow me to take an extra trade without really risking too much. But we will follow the 250 risk plan, like no matter what. So like whatever our stop loss, if our stop loss is 10 ticks, then we're gonna do 10 times 2 times 12. That's good. So 10 for 12 cons. Let me write this down actually in my sticky notes here. We're gonna need that. 10 stop loss, that's really small though, but still 10 stop loss with 12 cons equals $250 loss. So then if it's 40, what are we doing? Alright, 20 times 2, 40, 250 divided by 40, 6. 20 stop loss with 6 cons equals $250 loss. Follow these. So we're gonna be trading between 6 to 12. No more, no less. And that's it for this. We're set, man. Let's get it.